This is Taylor Shannon. I did savings accounts. The money you save is your savings. Try to save around 10% of your take-home income. A low minimum to open a savings account is typically $100. Service fees will be added if the saving account falls below minimum balance. The three types of saving accounts I'm going to talk about today is the regular savings account, which 65% of Americans uses today. There's certificates of deposit, which is also known as a CD, and money market funds. Saving is a way of being good to yourself, knowing you always have money put away. All saving causes sacrifice. Commonly, money is saved for a home or college expenses. You also want to save for emergencies. Losing your job or a health problem could develop. You want to set aside at least 6 months of income to plan for emergency. Another reason to save is making major purchases, but you may also save to purchase a less expensive item. You also want to plan for retirement. Even though it may seem too early, it's never too late to start putting money away. For most people, Social Security and retirement plans do not provide enough money to retire comfortably. Earning interest on your savings. In order to earn interest, you must put the money in a bank or savings and loan association. Technically, you're lending the bank your money. The bank uses your savings for loans. Rate of return. Rate of return is the percentage of increase in the value of your savings from earned interest. Simple interest is the interest earned only on money deposited into savings accounts. And compound interest is interest earned on both the principal and any interest earned on the principal. Choosing a savings account. Banks, savings and loans, savings banks, and credit unions all offer regular savings accounts. Three common types of saving accounts are certificates of deposit, money market funds, and money market deposit accounts. Some questions you want to ask yourself. How much do you have to start the account? Is there a limit on the number of withdrawals? How easy will you be able to access the money if you need it? Regular savings accounts. Regular savings accounts allow consumers to deposit or withdraw money at any time and to earn interest on funds. As I said before, 65% of Americans have a regular savings account. It's one of the most known. Withdrawals can be performed as easy as visiting a local bank branch or an ATM. Certificates of deposit. Certificates of deposit are also known as a CD. It requires you to deposit a specific amount of money in an account for a set period of time. Maturity date. Maturity date is when the money becomes available to you. They are low risk and relatively low return. Money market funds. Money market funds are a kind of mutual fund, or a pool of money, put into a variety of short-term debt by business and government. They usually require high balances. Account holders can only write a certain number of checks. Advantages of saving accounts. Insurance against loss. If the bank fails, the FDIC will replace depositors' accounts up to $100. Liquidity. Liquidity is the ability to quickly turn an investment into cash. Low rate of return. Due to very little risk with savings accounts, the higher the risk gets, the higher the possibility of getting a higher return. Could go both ways. Disadvantages of saving accounts. Inflation. Inflation is a general increase in the cost of goods and services. Inflation risk. It's the risk that the rate of the inflation will increase more than the rate of the interest on savings. The cost of saving account is also a big deal. Savings accounts earn interest, but they can also cost money. The money you earn in interest on a savings account is also considered income.